Ladies and gentlemen, in wake of the recent move upwards on Bitcoin, a massive move indeed, we are seeing a new bear case emerge. That is the Wyckoff distribution pattern. Now, you might have heard of it. It's a pattern that basically is suggesting that this recent peak we've seen at around 35K is the top and that we will go downwards from here. We've seen Wyckoff play out a few times on Bitcoin before, so it's certainly a valid market pattern. It's certainly a valid form of analysis, but in this scenario, I'm going to be telling you why I think it's actually not valid. And I'm going to be looking at some of the previous bear cases we've had in the past. We've had head and shoulders candlestick formation. We've had FUD in relation to traditional markets dragging Bitcoin downwards. We've had similarities drawn between 2019 and now that would have suggested Bitcoin goes down for 6 months. They've all been wrong, so I don't really see why this one would be correct. Is it not just simpler to assume that Bitcoin is actually bullish? With that said, we do need to look into it, and there is a chance that it's going to be valid, and I'm going to be showing you exactly what I mean by that and when it becomes valid as well. So guys, without further ado, let's get into the charts. Okay guys, before we get into today's video, let's check out the VIP group on Telegram. You can check out the VIP information and results group on Telegram, where you can gain access to the VIP group through using this picture here and this comment here. You can check out the information on how to join, the pricing information, what you actually get for joining the group, as well as the details for the 30-day free trial, as well as the details for the trading results. Okay, so go ahead and do that if you're interested in trading altcoins on VIP and making some profit on altcoin swing and scalp trades. With an 80% win rate on there currently over the course of 110 trades. So very good stuff there. Check that out if you're interested. Guys, I want to jump straight into today's video topic. Now, we're going to be discussing today, as we mentioned in the introduction, but we'll mention it again here because I want to actually give you an overview of the charts we're looking at. We're going to be discussing basically the new bear case that's forming for Bitcoin, mainly in regards to Wyckoff distribution. Okay, Wyckoff distribution is something that's circulating on Twitter, circulating on YouTube quite massively right now, and it does predict the Bitcoin goes downwards, and it does predict the Bitcoin is basically topped out. So that's an interesting one to look at. Now, I personally, just off the bat, so you don't get confused, I actually don't think it's as valid as people think it is. I don't think it's overly valid at all. I actually think it won't work. I think it won't play out like that. And that might be a take that you are shocked by, maybe. I know a lot of people believe in things like this, but I'm going to be going through the previous bear cases we've had, like, for example, S&P 500 bear case, like the Bitcoin's following 2019 bear case, like the head and shoulders bear case, and how all those bear cases have been invalid. And then I'm going to be looking into the differences, we might have between the previous bear case and the current bear case, because this is what the new bear case is, right? So, let's get into it, because I'm just kind of speaking a lot here in the intro for no reason, but I want to look at a few things first. So before we get into any of the content relevant to this video, such as the bear cases and Wyckoff and why I think it's not really that logical to assume it's going to play out like that, we're going to look at short-term updates. What have we done on Bitcoin? Well, obviously Bitcoin's broken above 32K, which is a level we held resistance for basically 6 or 7 months, or 8 months almost, and we've broken above that level. And right now, we've rejected from RSI on the daily chart, RSI resistance on the daily chart. It wouldn't surprise me if we see a correction or consolidation from here. That's what we said yesterday. Yesterday we had some sort of ascending triangle formation. It turns out that ascending triangle formation wasn't, it broke downwards, but we formed something new almost immediately. So it actually broke downwards. We went down from 34.5K down to 33.7K, which is a considerably large breakdown, right? 2% breakdown-ish, which is actually considerable. But ultimately, what we've got is a fresh formation here. It's more of honestly, it's more of a pennant formation than an ascending triangle. If you're looking at what it actually looks structure-wise, it's technically a pennant formation, and that would mean this is a bullish pennant formation, right? A bullish pennant formation essentially means that we head up into a pennant, we consolidate, we break upwards from the pennant. So we should be moving upwards further from here based off this bullish pennant formation. It should be bullish for Bitcoin, but obviously we can't make any massive, decisions on Bitcoin while we're ranging in this construction, because although the structure itself is bullish, we have very, bearish momentum indicators. We have volume showing us that we're seeing descending volume, which means weakness. We have in the upwards trend, which means weakness. We have, order blocks showing us that we've got very strong order block resistance resistance, as well as very strong order block support, but that order block support is not really present until down here at 32k, which we would expect to hold anyway, right? So we've got very strong resistance around this region. We've got Bollinger Bands showing us that we're coming in for a compression now, which means a move will be happening shortly. Within the next 24 hours, we'll be breaking out of this formation here. And it's just about whether we see it upwards or downwards. Now, I'm not willing to make any predictions on that. I think it's more likely we probably see it downwards and a retest of 32k, but it's certainly not necessary by any means. Bitcoin could just defy the odds like it's done over and over and over again. I mean, this entire move upwards from like 27k, was defying the odds. If you look at the structure we saw during these moves, it was all bearish structures. It was all ascending channel formations after ascending channel formations. These are all bearish structures that just kept breaking to the upside. So if Bitcoin continues neglecting TA, which it's actually done quite a lot in the last month, we could go upwards further for a retest of 38k, which is this red box on the screen over here. Okay, 38k. We could actually go upwards to 38k before seeing a correction and retest of low levels, and then move upwards further from there. That could be a certainly a possibility. So I'm not willing to make any short-term predictions on Bitcoin right now. I think you should be watching this structure. This charting formation, this market pattern that's formed, and I think you should be reacting when it breaks. If you reacted when the triangle broke yesterday, you would have made good profit, and that's what I suggested you do. You would have had around a 700 USD range for shorting, and that can lead to some pretty significant profits on something like 10x leverage, 20x leverage. You could be looking at 20, 40, 80% profit depending on the leverage you're using. So that played out quite well, and I see no reason why we shouldn't be doing the same thing right now. But ultimately, on the Bitcoin medium short-term charts, as long as we're above 32k, we're in very good territory, and that's kind of the conclusion I make off that. So let's get into the actual topic of analysis in this video today then. So the Wyckoff distribution is, again, as I said at the start of the video, kind of the bear case that's formed. We've previously had bear cases, as I mentioned as well. We've had, S&P 500, the whole the fear around that. Oh, guys, S&P 500 is going to drag down Bitcoin. We're going to enter a recession. That never really occurred. We had the similarities we were showing to 2019, showing that we'd see a 8 or 9 month of correction. We didn't really see that either. And then we had the head and shoulders, which we didn't really see either. So we've had multiple bear cases, and we've got a new bear case here. We'll look into the validity of it right now. So Wyckoff distribution is basically just a market pattern, and it's a market pattern that is based on, essentially what it's meant to be based on is it's institutions kind of manipulating the market to look a certain way to bait retail before doing something. So you have a Wyckoff accumulation, which is this photo over here. Let me bring it up. This is accumulation, which is the bullish one. And then you have distribution, which is basically accumulation flipped upside down. And it makes it bearish. It's just a way that allegedly it's a way that institutions manipulate the market to look certain, and it looks a certain way, and there's steps in which they do it. It's kind of coordinated manipulation before the market goes down. It's basically an advanced version of a market pattern. So if you think of something like a cup and handle stick formation, it's a more advanced, more nuanced version of that eventually leads to a similar result. Okay, so that's what we've got here, Wyckoff distribution. Now, the question is, are we actually in a Wyckoff distribution pattern? Well, I would argue it's not really as simple as that. I think people are stretching their imaginations a little bit far when they say we are in one, because, I've drawn it out here. I know it's a rough drawing, and I didn't really put much time into it for a reason. I don't think I need to. I think you can see exactly what the structure people are assuming this is, right? A Wyckoff a distribution pattern is literally just kind of like, this is what it looks like, right? I'll draw it over here. This is a Wyckoff distribution pattern. You go upwards, okay? You see one peak, second peak slightly higher, third peak slightly higher. You go downwards, you retest that level a bit, and then you drop downwards. There's kind of a neckline over there, and there's 1, 2, 3 peaks. That's what a Wyckoff distribution is. And in the same way, a Wyckoff accumulation is a similar thing to the downside. Okay, you go downwards, you see 1 low, 2 lows slightly lower, 3 lows, you come upwards, you test for low, and then you go upwards, right? So it's just basically almost like a diagonal triple top formation with a little bit more nuance that lasts a pretty long period of time. I don't think, okay, yes, technically speaking, you could argue it's kind of the same thing, what we're seeing right now, but I actually don't think it's as valid as people think it is at all. I think it's very clear what we were doing, okay? We came upwards, and we tested a horizontal level 2 times. We went slightly higher in the second retest. That's because we were lurking in that region for longer. But we rejected ultimately, okay? We went downwards, we would have dropped here, but we saw the ETF news kind of pump Bitcoin upwards, and we went upwards, we broke it to the upside. We're not at the same resistance level we were at. Wyckoff distribution relies, okay, on Bitcoin being at a very similar, if not the same, flat resistance level on all three of the retests, even though we deviate a bit higher. The fact of the matter is, we've very clearly broken above this resistance level that is meant to be horizontal, as per Wyckoff, very clearly with the strongest daily candle we've seen in years, okay, with a 3,100 USD daily candle, to act as though right now Bitcoin, which is currently, a maximum of 4,000 USD, okay, 15% higher, okay, than the recent high, is still in the same Wyckoff distribution pattern, I think is a pretty big stretch of the imagination. Okay, so I'm not saying it's invalid. I would say it's certainly a stretch to say it's valid. I'll say that. But what I will say is this, until I see evidence of it actually playing out further, until I see evidence as in a break back down below 32K, a break back into the previous range on Bitcoin that we saw for 8 months, I'm not taking this seriously to any regard, and I don't think the evidence exists to take it seriously. That's my simple opinion on it, and I'm not going to waste any more time on it because I think it is a waste of time. It's a waste of time until we see something occur. You can't seriously sit here and tell me, okay, that the three peaks we see on Wyckoff distribution, which were meant to be exactly the same in distance from each other, okay? One of them, the first peak to the second peak was 2%, and from the second peak to the third peak, it was 11%. Okay, those numbers aren't anywhere near each other. That's 4.5 times higher, okay, than the distance between the first and second peak we're seeing between the distance between the second and third peak. I don't know if what I'm saying makes sense to you, but basically what I'm saying is this. I'm saying that we've deviated a lot higher on this third peak of the Wyckoff distribution than we should have if we were following the pattern, and that puts into question the validity of the pattern in regards to this market structure, and therefore I'm not willing to take it seriously until we see evidence of it actually playing out, okay? Such as a break below 32K. Right now, Wyckoff distribution, in my opinion, just seems like a placeholder for the bearish argument. And I don't think there's many placeholders left because I don't think the market is very bearish. Look, the fact of the matter is this. All right, there's always going to be bear cases. There's always going to be bearish arguments. At any point in the market cycle, at any point in structure, there's always going to be bearish arguments. There's always going to be bullish arguments. Right now, we have seen bearish arguments time and time again. We've seen, as I said, the argument that was so persistent in cryptocurrency, that's still going on, okay? That the S&P is going to eventually drag down Bitcoin. Guess what, guys? Guess what? The S&P 500 has been bottomed out for over a year. It's been 379 days. 380 days. The S&P 500 has been bottomed out. Where is this correction on the S&P that the bears have been calling for? Where is it? It's been a year, full year, 365 days. Okay, it bottomed out in October last year. It is currently October 2023. Where's the correction? Right, it's nowhere to be seen. That's a bear case. That was, that didn't play out. Another bear, and that was extremely popular. Everyone and their mums believed that. Right, another bear case. We had the similarities between 2019 and now. If we delete everything, we can see there are similarities. We had a rounding bottom, we had 1, 2, 3 distinctive moves, and then we had a correction that lasted from June 2019 all the way through to March 2020, sorry, which is, basically, 9 months. So again, rounding bottom, 1, 2, 3 moves. We should have seen a correction that lasted 9 months from July all the way through to something like March, okay, or even April, okay? So that would have happened if we were following the 2019 structure. That was a bear case, very, very popular. And of course, with this recent move, that bear case has been invalidated as well. And then we also had the head and shoulders market pattern, which is a head and shoulders market pattern stemming from March 2023 with the left shoulder over here, right shoulder over here, and the head, over there, and the right shoulder supposedly was meant to be forming, but we actually broke to the upside and clearly broke that formation. That was meant to be targeting 19K. What I'm saying is we've had 3 very clear, and we've had many more than these, right? These are just 3 examples, 3 very clear bearish scenarios that seemed valid on the surface, but ended up just being invalidated. And it kind of leads you to believe, right? Or it leads you to ask the question. It's like, is it not just more logical to accept that Bitcoin is going upwards? You know what I mean? I feel like people are constantly grasping at these kind of weak arguments and just ignoring everything else. Like, is it not just more logical to accept that Bitcoin is broken above 32K? all right, which is a major macro resistance. Like, let's look at what 32K is. Let's go to this chart here. I always like showing this chart. Okay, let's look at this color-coded range-bound chart. Okay, we are currently, let's take a look from the bottom. We are currently, all right, 119% higher than the bottom. Okay, we're 136% higher than the bottom at the peak. We've broken above 1, okay, 2, 3 separate macro ranges that we ranged in for months on end. Is it not just more logical to assume that Bitcoin's macro bullish, especially when you're considering that the 4-year cycle theory, all right, a market cyclical trend on Bitcoin that predicts the tops and bottoms, perfectly predicted the November 2021 top, regardless of all the FUD going around, perfectly predicted the November 2022 bottom, regardless of all the FUD going around about S&P going lower, and is going for, well, at the moment, seems perfectly valid to predict a 2025 top. Is it not just more logical to assume that that is correct, and that these bearish arguments are short-term corrections, medium-term corrections at best? I don't understand why people are so persistent in arguing that Bitcoin is going to go down. It's like they want Bitcoin to go downwards, but it's not logical to assume Bitcoin's going to go downwards because the charts don't actually suggest it. Just because you have one bearish argument, it doesn't invalidate everything else that's happened in the charts. I want to make something very clear. Even if Bitcoin goes down, I guarantee you these people will not buy Bitcoin at lower prices. They won't. They say, oh, I want Bitcoin to go down. Bitcoin's going to go down. We're going to buy lower, guys. Guys, Bitcoin went down 80%, or close to 80% from its highs. They didn't buy a single thing and they were expecting to go lower. What makes you think they're going to buy this time? Because I'll tell you right now, as I said before, there will always be a bear case. So if Bitcoin goes down, it breaks down below 15K, guess what? There'll be a bear case for Bitcoin to go to 10K. If it breaks down to 10K, there'll be a bear case to go down to 5K. Eventually, it's not going to happen. Eventually, Bitcoin's going to go upwards and they'll stick to their original argument and they won't even buy anyway. So the whole idea of wanting Bitcoin to go down, wanting Bitcoin to fail from a price perspective is completely, not only is it selfish, it's also just dumb because you're not going to buy anyway. Let's be honest. If you didn't buy at 15K, if you didn't buy at 16K, you didn't buy at 18K, you didn't buy at 21K, you didn't buy at 24.5K, you didn't buy at 32K, why are you going to buy anyway? You're not going to buy. It's not going to happen. You're just so stuck in your way of bias that it's simply not going to happen. So apologies for the rant, but it is something that kind of makes me laugh. And it doesn't even annoy me. It just makes me laugh. Whenever I see someone who wants Bitcoin to go downwards, it's like, why would you want Bitcoin to go downwards? What, don't you want crypto to succeed? Don't you want the 4-year cycle to remain in place? Don't you want a predictable macro trend that tells us exactly when the market's going to top and exactly when the market's going to bottom in every single cycle on a 4-yearly basis? Surely you'd want the maximum amount of predictability for cryptocurrency, because with predictability comes profit, right? Because you can plan accordingly. Why would we want Bitcoin to go down below 15K and for the market to be random forever and the 4-year cycle to break and the market to be uncertain and crypto be on the edge of death? Why would people want that? What, just so they can buy Bitcoin a little lower? And then what? And then what? You get Bitcoin at 10K instead of 15K, and now, yeah, you got Bitcoin a little bit cheaper, but you have absolutely zero macro trends to rely on to tell you where Bitcoin's going to go in the future. Now it's just pure gambling. The only reason Bitcoin's not gambling, the only reason cryptocurrency as a market is not gambling, right? The only reason why it's actually justifiable from a financial perspective is because it's not gambling, because we have macro trends, okay, that back the price action. Fundamentals are all well and good, but they actually mean nothing when push comes to shove. All right, we've seen that over and over again. If you think about the bull market, 2021, if you think about any bull market you've seen, you can find the coin with the best fundamentals you've ever seen, and it means absolutely nothing because they'll fail to gain the market's attention because the charts look bad. At the end of the day, when push comes to shove, everything comes down to the charts. So you wanting Bitcoin to drop below 15K is you wanting Bitcoin to die. Essentially, that's what it is. And it's just, it really highlights your ignorance on how markets work. Charts are literally everything. TA is literally everything. There's a reason I focus on TA in every single video. There's a reason I don't talk about fundamentals too often, because TA is always more important than fundamentals, and TA also reflects fundamental events. So it's more important to look at than fundamentals, even if you think fundamentals are relevant, which is actually a question in itself. So guys, thank you for watching the video. I hope you enjoyed it. Before we end, we're going to check out the Bitget and Bingx exchange. Actually, I will mention as well, if you have any questions about Bitcoin or cryptocurrency you want me to answer in my next video, go to the YouTube community page and answer and respond to this post here. I'm going to be answering questions tomorrow. But the Bitget exchange, it's a global exchange other than the USA and Canada. It's KYC. You can sign up using my referral link. Bingx is global. And all you need is an email and password. So again, Bingx is everywhere but USA and Canada. Bingx is global in general. All you need is an email and password. Sign up to either of those exchanges. They're handpicked by me. They're very decent exchanges. I use them personally, especially Bitget. I've used it for 2 years. 15% trading fee discount with my referral link, as well as exclusive rewards as well. Go ahead and do that. Support yourself by getting on a good exchange and support the channel by using those referral links there. We've also got Crypto Academy, guys. Crypto Academy Become a Trader 10-unit course is a course that teaches you how to trade. Teaches you everything you need to know about the markets in terms of not only TA but also fundamentals, but mostly focusing on TA, market patterns, indicators, candlestick formations, all that kind of stuff there. It's all on the website. You can read up all about it and throw us an email at the email address contact cryptoacademycourses@gmail.com. Guys, thank you for watching. Hope you enjoyed, and I'll catch you in the next one. Cheers.